All right, let's go ahead and get started. Hello, everyone. My name is Mark Roberts, owner of Affinity Asset Management. And today we're going to be hosting the first of many weeks to come of what we are calling the Community Cafe. The Community Cafe is going to be hosted by three local community-centric companies. We have Stockton & Stern, which is a law firm. Today, joining me today, we got Christian Toman, Senior Vice President of First Option Bank, and then myself, owner of Affinity Asset Management. My name is Mark Roberts, like I said. The three of us will be talking each week. There'll be usually two of us on each of these webinars. Each week, we're going to be talking about a variety of topics from banking to legal to financial and tax. We're doing this live with no edits. We're going to do this every week, Wednesday at 8 a.m. It's going to be lasting about 30 minutes. In the near future, we're going to be asking followers to join in and participate in asking us questions, questions related to today's topics, questions maybe related to one of the host professional fields. And today we have Chris Toman joining us, and we're going to be talking about asset allocation and the importance of having an investment community behind us when it comes to us, each individual with our companies, building our clients' portfolios, and then more importantly, how to manage those client portfolios. So Christian, thank you so much for joining us here today.
Absolutely, I'm glad to be here.
Come here, honey.
Why don't you, Chris, my screen keeps going blank on me here.
Mine does too.
Up here just a second.
I just want you to see Chris, but okay, yeah.
All right, I think we're trying to get this straight. All right, Christian, do me a favor. Let's start off. Why don't you tell me a little bit about your investment committee?
Well, I was thinking about how to start this, Mark, and the old Winston Churchill quote came to mind last night when I was thinking about that. You never let a good crisis go to waste. And I think, as I look at our business and how we differentiate ourselves from our competition, that kind of rings true. It gives us an opportunity to sit back and make sure that we're doing all of the right things for our customers. We're making sure that we're making correct decisions. And you and I have had in-depth conversations about the importance of having an investment committee behind us. You have one, I have one. I don't think, as you look out at most financial advisors out there, that they actually approach the world from that standpoint. Would you agree with that?
Totally. We have a lot of new clients that come work with us every year, and they come work with us because they were referred to us by other folks. And we ask them about their experience with their current financial advisor. And that's kind of one of the questions we like to talk about is when your financial advisor puts you in that mix of investments, what was the logic behind it? What was the thought behind it? Is there people in that advisor's office that's helping? Is it a home office dictated kind of asset allocation mix? And very few times do clients ever know the answers to that. They don't know how their investments are mixed.
Right.
Is that what you're seeing too?
I agree with that. As we approach this coronavirus situation in the last few months, one of the things that steps out is the emotional aspects of investing. And I hear it from people that I talk to. They're very afraid right now. And invariably, fear and greed are the biggest factors in destroying a portfolio. If people are coming at their decision-making process from a position of either fear or from greed, they can make mistakes that will define how their portfolio lasts throughout time. And so one of the things that we're very careful of in our conversations within our investment committee is to take that fear and greed out of the equation, to make sure that we are coming at the decisions that we're making for people from a standpoint of what's the best thing for them looking out 2, 3, 4, 5 years from now, as opposed to how do they feel right at this moment in time.
Wow, well said. Honestly, I think I say a lot of the same thing. Maybe something that I might put in there as well when I talk with folks is with investing, we try to make things as black and white as possible, but as you know, everything's not black and white. There's a lot of gray out there. But what we try to do with enough research, back testing, and a lot of analytics, and more importantly, getting people much smarter than me behind me on my investment committee to research this, it's how do we turn those gray areas into more black and whites so that we can make educated decisions and very calculated, timely decisions. And I agree with you. Right now, I think there's a lot of fear in the market. right now with the coronavirus, I think I've also noticed, let's just say, an undue optimism right now because the stimulus package that's been put in place, and we've had a nice little rally up a smidge. I think people are just so optimistic to get out of the house and go back to work, and that's automatically going to fix everything.
No.
And that's obviously not going to be the case.
Right. Yeah. Anytime we go through a crisis, you invariably have to look beyond the crisis to see what that's going to look like. And if you remember back to 2001, 2002, coming out of the tech crash bubble, it took till 2005, 2006 before people started to feel normal again. And that was a 5-year window. Out of 2008, 2009, it was probably 2012 before people began to let that, honestly be in the rearview mirror. And it's going to be interesting to see how this crisis evolves and how long it takes for people to feel like they can get back to their normal lives, that they've got the ability to walk back into a stadium and watch a football game, to be able to go to a restaurant and not feel the pressure of having to distance themselves from people. The ability to walk up to somebody and shake their hand. I mean, it's going to be a long time before we get through that. And invariably that fear, that trepidation will spill over into the decision-making process that people have inside of their portfolios.
I totally agree. I have, right now, what we're starting to do with folks is once the coronavirus happened and President Trump came out and he made the announcement that this is going to be a national pandemic and this is going to be a big deal, we just know that there's a ripple effect of things that's going to happen afterwards. Because that same day, sporting events and major sporting leagues were just canceling things left and right. It was just a domino effect of one thing after another canceling. So we just felt that this crisis just put a lot of fear into people because we've had recessions, we've had market corrections in the past, but we haven't really had anything like that related to a virus and how unknown that is and how fast market drops. But at the end of the day, with the economy turning off the way it is, I found a good way to say it. The economy turned off like a light switch.
Yeah.
But it's going to turn back on with a dimmer switch. And so even though people go back to work, not every American is going to go back to work right away. It's going to be slow. It's going to be in stages. And even when we're back to fully working again, there's going to be a lot of companies that have figured out ways to be efficient and not let all their employees come back to work. We're going to see this.
Yes.
I think we're going to see a backlash of economics that is still yet to come. So throughout this whole coronavirus thing, Chris, I don't know if I think I've told you this before, but we're sending out emails every month to our clients. Every week to our clients every Monday, just giving them updates. Here's what's happened in the last 7 days since last Monday.
Right.
Then we host a teleconference every Wednesday, like I'll do later today at 2:00. And it's just to talk for about 45 minutes and allow our clients to ask questions of things. And so they have a chance to read the email, they have a chance to hear me. They have a couple different ways every week to get updated because, Chris, and I'm assuming you'd agree with me on this, when our clients or you and I, we watch the news is preying on people's fears. And that's what gets people to tune in and watch. And that's how they get viewership. That's how they can sell commercials. And it's the same thing with the internet. The internet is full of drama-based, emotions-based news, and it fuels those emotions because they're selling advertising, they're selling clicks. So it's right now it's a matter of keeping clients educated to minimize their anxiety and minimize their fears. Would you agree with that?
Absolutely. One of the things that I think differentiates, and you and I have had many discussions about this, but differentiates us from our competition is the fact that we have investment committees behind us. Why don't you tell me a little bit about how your investment committee is structured and what the purpose of that is in your eyes?
So our investment committee is made up of 7 individuals. We have a combined 133 years of experience, and that's a lot. We used to meet monthly, and we could talk about a variety of topics, but now we're meeting every week to talk about the same topics and more, just because everything is moving so fast. Now, granted, having said that, the stock market's kind of been flat for about 4 weeks, but things have been moving fast with this whole thing, coronavirus. And so we meet. Every time we meet, we're talking about what does analysts and economists say from all the major companies that we do business with. BlackRock, JP Morgan, Oppenheimer, PIMCO, you name it, a whole bunch of great companies. And they have analysts and economists all over the United States, all over the world. And what we're looking for is we're looking for different analysts, different economists with different companies saying the same thing. And when you have multiple people saying the same thing, there's got to be a lot of fact behind it. There's a lot more black and white and less gray. What we try to avoid is when you hear some comments, quotes, and things like this from an analyst or economist that you don't hear anybody else saying, kind of like a one-off. It's almost kind of like they're making a name for themselves. And we try to avoid, spending too much time dwelling on that information. So when we meet every week, we're sharing the information that we get back and forth. We are sharing what's in our models right now. How are they performing week by week, day by day? We literally know what every investment in every one of our models is doing every single day. And so our analysts, while I'm a financial advisor and I'm talking to clients all day long, or I'm on the phone or in person, not in person these days, but webinars, I don't have time to do that research, and that's what my analysts do,
Right.
and they're brilliant at it. So they'll come to me and say, ABC investment is now starting to underperform other investments that are similar to it in its peer group, and we recommend that we need to get rid of it and put something else in its place that's performing better. It's a similar investment, but it's a different manager, different company, and we need to put that in its place. So I have a variety of things that we talk about every single time. And then every once in a while, we'll even throw in some operational type issues that come up. Trading issues, a client that is looking for something that's a little one-off because of a unique situation or a unique emotion that they're having on something that we need to kind of address and help them with. So for me, I'm going to tell you it's a big peace of mind to have a lot of people around me who have same beliefs, same viewing style, but they see things differently than me. They just view it differently, and we're all there to share information. So at the end of the day, we're doing the right thing for clients. And I'm guessing for you with your investment committee, it's probably a whole lot of very similar to that. So I'll throw it back to you and just tell me what you guys are doing with your investment committee each time you meet.
Well, you and I are both what we call fiduciaries. And I know for most of the people watching, they don't understand what that means. But I have a fiduciary responsibility in the decision-making process that we have, not only towards the customer, but I also have to act in the best interest of the bank and the Federal Reserve. And so our investment committee and our administrative committee are both designed to take that decision-making process to a body and have those decisions then filter up to our board of directors. So our board of directors gets to see everything that we're doing. So every model that we have, very similar to what you said, is designed around making sure that we know what every investment is doing. I have a head of our portfolio management team that sits all day long and analyzes each one of the investments, and we run stock and bond portfolios, we run mutual fund portfolios. And in doing that, he spends a significant amount of time taking a look at what's happening within those entities, and then he brings that back to our investment committee and we make a group decision. I think a lot of people look at you and I and they've got this vision that, they bring their money to us and you sit down at a computer screen and say, okay, this is what I think I'm going to buy today. And invariably, that's not how it works. I mean, we have a committee, the decision-making process, we back test data. We make sure that the decisions that we're making are in the best interest of our customers. We're taking a look at how each one of those pieces fits within our asset allocation model. And invariably, we're taking a look to find out if there are things that we need to do differently. It's very easy to approach your and I's world from it's working, don't fix it. Don't fix what's not broken. But I think that, whatever is working right now eventually will break. Money managers move to different entities. People retire. A strategy that's worked for a period of time stops working. And if we're not paying attention to that, if we're not taking a look at those things and saying, what should I be doing differently consistently, then I think we're making a mistake and falling into that trap that, may end up taking us down a road we don't want to go down.
Oh, yeah, well said. I agree. I kind of find, Chris, when new folks come to us and I'm looking at their portfolio of stuff, and maybe they're a client of a major investment company that, that we've all heard names to. But I see client after client from those companies come over to us, and they all have very different things. And what I've kind of found over the years is financial advisors, any of us, you and I, we can all do this. Anybody can sell a portfolio. Anybody can build a portfolio and sell it.
Mm-hmm.
But it's really not what they want us to do. That's what clients are thinking that we should do, is sell them a good mix of investments. But at the end of the day, it's not about the selling of the investments. It's about the managing the investments, and to have a system and processes in place to manage it. So I know for us, we have 9 different models. All of our clients are going to be in 9 different models. One model being the most conservative is like 100% bonds. One model that's 100% stocks, the most aggressive, and 7 in between. That's a combination of things.
Right.
So that way we know what everything is going on every single day. When clients need to take withdrawals, we know exactly where we're going to take it from. If we need to make an adjustment and get out of ABC and go into XYZ, boom, we can hit a couple trades, and every client who has ABC gets out and goes into XYZ. So it's the tradability, it's the manageability, it's the scalability that is important. And we can treat all clients the same, whether they have a $10,000 account, a $100,000 account, $1 million account, or a $10 million account. They all get treated the same. And that's, for me, what I have found the best thing that we can do with clients is not only can we build the good mix, but more importantly, it's the management of it.
Right.
So I'm kind of hearing you say the same thing.
And there's one word in there, as you were talking about scalability, there's one word in there that you didn't mention that I think belongs in there, and that's accountability.
Yeah.
The ability for you for all of the people that you work with, for you to be accountable to them and for them to be accountable to you. I'm accountable to the different trusts and charitable foundations that I manage. You're accountable to your clients, but we're also accountable to each other. We have to do what's in the best interest of the organization. I have to do what's in the best interest of my other investment advisors. You have to do what's in the best interest of your other financial advisors. To me, that's important, that accountability. Otherwise, you're just off and can be a loose cannon managing money the way that you want to.
So, Chris, something, I know we've talked a little bit about this and kind of in preparation for today's community cafe, but I don't think I've ever really asked you, clients right now that call you and have some concerns. Let's say they're really freaked out about the market, or maybe they have over optimism because we had a little rally after the stimulus package. How do you typically handle those conversations with those folks? Kind of give me an example of something like that.
Well, okay, so you were talking a little bit about the different models that you have. When we sit down with somebody, whether it be an institution or an individual, doesn't matter. Whether it be an irrevocable trust, charitable foundation, doesn't matter. We set an initial asset allocation model, which basically means you're going to be X% in stocks, X% in bonds, X% in cash. We take the emotion out of that decision-making process. We have run spreadsheets that say, okay, right now I'm just giving you an example. Let's talk about a balanced mix. We're 47% in stocks, 47% in bonds, 5% in cash. As we begin to sway from that, as changes happen in the world out there, as the environment changes, the value of those investments will change. Our job, I think, is to bring us back in an unemotional, decision-making way, bring us back into balance with what we set up as a long-term discipline. And so, when that question comes up, when the person calls that's scared, invariably, I find that they're scared because they don't understand what's happening. They're afraid that they're going to run out of money. So there are 2 different aspects to that question. One is, what is actually happening with my investments? The other is, am I going to be okay? And you and I have to be able to figure out what is the question that they're actually asking. Some people, they're actually asking about the investments. So it goes back to, how does the asset allocation model fit with their long-term goals and needs? But for some, it's a question of, am I going to be okay? Am I going to be able to live beyond how long my money lasts? I mean, is my money going to outlive me? And so with that person, it becomes a different conversation than the person that is asking about is asking about how their investments are doing. So would you find that to be true?
I do. That's one of the things I love partnering up with you and Glenn Stockman was Stockman Stern all the time on things is we have a lot of holistic experience over our careers. We have a lot of knowledge collectively amongst us, and we see things in a broader sense and know that not everything is black or white. And clients come to us every day with questions, and they come to us with requests and give us curveballs, and it's how you address those and how you help them. Clients do care that we know our stuff. They really want to know that they're working with somebody sharp and professional, but they also want to know that they're working with somebody that genuinely cares about them. And that's one of the things I've always liked about you, Christian, is that you just always made me feel like you care about what I'm saying. You're asking me questions. You've just been a very great colleague to work with for me for over the years. So I'm excited to partner up with you here in the future, continue moving forward in these community cafes. I was going to comment that one of the things I've noticed of late is maybe a little antsiness from clients about the rally. And this has caused me to kind of reflect back because we had a sharp drop, a sharp rally, and now we kind of flatlined out for about 4 weeks, just kind of waiting. Are we going to continue to go up, or is it going to finally start to go back down again? And we have so much economic stuff happening, you have to assume it's going to go down. Every analyst and economist we get data from all says we're going to have a W, and it's going to be multiple shapes of a W down here. And that's the crisis you're talking about, taking advantage of those.
Well, and it's interesting, the most recent one I've heard is that the economy is going to come out of this like a Nike swoosh. And that's the first time that I've heard that that's exactly.
Yeah, I get that.
The head of my portfolio management team always brings this up whenever somebody makes a decision, a rash decision, somebody that I want completely out of the market, take me out, I'll get back in when it feels better. Whatever the answer to that question is. He says, that's fine. Let's put a piece of paper over the graph and you tell me what's going to happen next. We don't know. We don't know if we may be headed back to 19,000. We may be pretty much done with this and headed to 27,000. You and I don't know the answer to that question. Nobody does. The market is smarter than any of us are. But if we have a sound discipline, if we make decisions that are in our customers' best interest, and we're always looking at it from, here's what our discipline says, I think that our ability to react to those economic challenges that we have become easier. Would you agree with that?
Yeah, very, very much agree. Very much agree. And I just don't think that our competition out there, there's just so very few of us that's like us, who have committees who put these things together and build specific models the way that we do. I just don't think we have a lot of competition, but in our industry, technically we have a lot of competition. We've got a lot of financial advisors, but I just find like when someone comes to us and they want to ask us for a second opinion of what they have and what would we do if we were managing their investments, and we find that it's pretty easy for us to demonstrate what they have and how what they have works, what's their mix, what's their risk, what's the growth potential they're getting off that risk. And a lot of times I find two things always happen. People's portfolios are riskier than what they thought it was. And number two, they're not getting the return that they deserve for the risk they currently have. So I never really judge people by their risk. You can be old, be young, be high risk, low risk. I really don't care. What I care about is that you're at the risk you want to be at. And more importantly, that you're getting the returns you deserve for that risk.
Yeah.
So I find that's kind of very easy for us with today's technology. And like in my case, my investment committee, having some brilliant people behind me that can put together an analysis to educate these prospective new clients. This is what you have. This is what we have. And here's how it compares risk, return, the whole 9 yards. So yeah, I think there's just very few out there that do what you and I do, Christian.
How often do you see people walk in the door, that you're looking at their portfolio for the first time, and they may be in their late 70s, early 80s, have all of the money that they'll need to live for the rest of their lives with no issue. And you look at their portfolio and they're 98% in the stock market, dominated by 4 or 5 positions because they, the FANG stocks or whatever the case is. And I mean, the only thing that could derail them living the rest of their lives and being able to do everything they want is if their portfolio blows up and you look at their portfolio and it is designed to blow up.
I see that a lot.
Mm-hmm.
Way overweighted in 1 or 2 mutual funds, way overweighted in 1 or 2 stocks. I'll have clients, I'll even ask the question, hey, on a scale of 1 to 5, where do you think they are? And where do you think you are with your mix? And they'll give you their opinion. But I already know the answer because I've already done the analysis work. And it's amazing how many times they think their risk is lower than what it is.
Right.
And yet we do the analysis and they got 98% stock of some sorts in their portfolio, individual stocks, stock mutual funds. And then I'll come back and it's just try to ask them, why do you think your risk is where you say it is? What is it about your conversation with your previous advisor or the statements that you're looking at? What is it that makes you feel like your risk is where it is? And I get these answers and they're really good answers, but it's amazingly how wrong that most people are. So I just think that they don't really know their risk. So in times like this, when we have a steep drop in the market the way we did, that's when people really truly identify what their risk is. When they've lost that much money in this short period of time, but in the last 11 years, when everything's been going up with very few dips,
Sure.
It's very easy to underestimate your risk.
Yes.
And so I think today, people are starting to reevaluate their risk levels.
The last comment that I'll make, and I don't know how often you hear it, but I hear it from people walking in the door. I want to make some changes, but I want to wait until I get back to where I was. And, I don't want to lock in these losses. And that's the one that absolutely makes me shake my head because, you've got to approach every investment piece as it is from this day forward, not what's happened over the last year, 6 months, 5 years, 10 years. You saw it with General Electric. General Electric's a perfect example of a stock that at 50, nobody wanted to sell because they didn't want the tax burden. At 8, they didn't want to sell it because they were afraid that, or they wanted to get back what they had lost. And here we are at 6, and company is in a different track than it was. And there are thousands of General Electrics out there.
Yep. I totally agree with that. Guys, I think we should finish on that note. That was well said. I think we're right at our 30 minutes. I think we should probably call it a day. I know we didn't take questions today, Christian. I know we talked about doing this, but for the first 1 or 2 weeks, as we're kind of getting this launched and we get more followers and our followers are sharing it with other friends, we want to encourage folks to ask us questions. They can type a question to us and we'll have folks around us while we're talking that can help us navigate the screen and get up the questions so you and I can continue to talk without being distracted by all the buttons and the clicks. But Christian, I want to say thank you so much. I'm proud to call you a friend. I'm proud to call you a colleague. I appreciate the business I've referred to you of my clients that you've been able to help as well. Thank you for being on today's Community Cafe, and I'm looking to co-host more of these with you down the road. And I think we're going to have Glenn Stockton on next week, representing the legal side of the three of us, and he'll be on. I don't know that we've identified the topic for next week and which one of the two of us will be on with Glenn Stockton next week, but I'm sure we'll get that worked out in the next day or two. So Christian, I want to say be well, be safe, be healthy. Thank you so much for joining today.
Same to you, my friend.
Thank you, buddy.
May God bless you.
Thank you. Same to you.